You're watching Master Trader Live, simple market analysis and education to help you make money in the markets. Join us live each week on YouTube and see past episodes at Master Trader Live. And now your show hosts, Greg Capra and Dan Gibby.
Good afternoon, everyone. Welcome back. Or welcome. Today's Master Trader Live is about afternoon day trading, which is my preference more so than in the morning. Mornings can set up things, but they tend to be a lot faster. You're trading futures and you get the 24-hour chart, which is active, of course. It's a little, I think, better suited for the first thing in the morning. Of course, there's gap trades. We get some pre-market data, but in the latter part of the day, the advantage is we've got a whole day of data to assimilate into our trading plan as to what happened, measuring relative strength and weakness, whatever we're trading against the broader markets or a particular sector. So that extra information can give us a better advantage, maybe not to get whipsawed. But the current market environment is one in which there's been a lot of whipsaw action. It is what it is. Sometimes it'll pass. I've seen it before. Things come and go in different market environments, but in the afternoon is also an advantage to those that maybe aren't ready first thing in the morning. So let's get to it and take a look at what we got today.
Good afternoon. You caught me putting a trade in right at the last minute there on Lunar. All right, so yeah, good afternoon. We got a great subject here today. So let's jump right into it. All right, Greg, I was going to have you talk about your course here, but you disappeared. So we have a technical based. Are you there? Can you hear me?
Loud and clear.
All right. Yeah, why don't you talk about this slide, because it's how you put together the course, which obviously is the Master Trader Strategies course.
Right. So those of you that have been here, well, Dan, it looks like that slide is overlapping on another slide with the header on the upper left there.
Oh, you're right.
So we usually show the thought building lessons or concept that make up MTS in each MT Live. And so what I decided to, when I sent to Dan, I said, Dan, this is what we teach in a complete in a course, whether it's a swing trading course or MTS, everything incorporates all of these individual concepts that eventually we put together to formulate strategies. So one of the things that were, I guess, not in there, get my drawing thing out here, was not in there, pretty much was this part of the bottom here, which is what is done in the course after we go through each of these individual concepts, right? And one by one, putting all of this together. And each of these is what makes up all the MT Lives, and some more detailed than others. Of course, money management. So the trader psychology is something that you usually didn't see there, but it's a huge part of being successful in trading, because all the things that we can learn, and then especially as a day trader, all of that you have to process, the things that are going on in your head have to be aligned with a plan. And this trader psychology part is, I go into much depth into that in the courses to explain all the things that we need to be thinking about and get a trader mindset together with that. So it's a really important part, and it's something that we're going to do some MT Lives about. And it's been asked about in the past, but I don't think we've done too much about it. And of course, trading day preparation. We've talked about that in the past and what you need to do to get ready, right, for the trade. And then, of course, in the course, after going through all of that vast amount of information, we review it and go through it, and repetition. And then, of course, what we do in coaching, which I did a session last night, which is a review of everything here. We talk about and going over trades and different setups and so on. So once you learn these MTS concepts, the repetition of it makes it second nature. So, and we'll talk a little bit about maybe the psychology. We have many times talked about the psychology of patterns, not so much about the psychology of what's going on in between your head during a trade.
Well, and how we address that issue, Greg, is when we create these objective checklists, if you will. So let's say, is it a quality setup, and we're in a trade and in trail management mode, for example, those two components. And so we go through and we objectively say, okay, is it a quality pattern? You go through those concepts that you just talked about. In trade management, has it violated a prior bar's low, pivot? Is it near resistance? Is it accelerating? What's the market doing? And that's what helps battle what's in between your head. Because, we all know the saying about, people cut their winners short and let their losers run. And so that's an excellent way to try to be objective of what's happening in the moment, as opposed to between your ears. So we're technical based setups. Every one of these pictures are bullish setups. And then we take that picture and you overlay all these other concepts. So Greg, a new person might read all these and say, that sounds like too much work. And it's a thought building lesson, and you have to present it in this way. But the part that I like to emphasize is once you have experience and that textbook knowledge in there, as people will see when we pull up a live chart, in 1/8 of a second, we assimilate all those concepts. So it's just something you have to learn and internalize.
Okay, go back to that slide, since this is something new. Is there an alternative to learning these individual concepts and then learning how to put them all together? Is there an alternative to this? Do you think there's an alternative to this? That's an open question to everyone that's here. And I'll tell you what I believe the alternative is. Val says no. Robert says, I do not think there is. Well, the alternative is what you are inundated with day in and day out. Indicators. Let the indicator or someone's proprietary system indicator think for you, and you can be the robot that's being told what to do. And this is when it's time to press the button. What Master Trader does is to teach you thought building lessons that you then learn how to put everything together. Candle language, support, resistance, moving averages, volume retracements, bar by bar, and bar by bar analysis aligned with money management equals great trader psychology. You have to marry the patterns and money management to have proper trader psychology. Because if you don't have share sizing and money management down, you're going to be influenced by emotions on an exponential level if you oversize a position, and we've all done that. So all of these things together make you a professional trader, an investor, because you're learning how to do this yourself. And with a method that has stood the test of time for 30 years. So let's get to the meat.
All right. So we're going to be talking about other late day strategies, but here's the primary one. And it's not even on this slide here. You don't see one of these called Master Trader Late Day Breakout. We have other compelling setups. So, this is just some words if you want to print it and read it, but I'm going to make it really simple for you. I'm more of a visual guy. It's up on the day, bullish consolidation until after 2:30 reversal. bullish price action, buy some type of bullish breakout. And we're going to show you many examples. Stop under the base. But, you know, these are just words you can read and you'll see them in these examples. All right, what do we got here? So here's my daily chart. So we're looking at multiple time frames. So notice on this particular day, it gapped up a tad, a little bit right here, which is this bar. These vertical lines obviously are the change in day. So this prior day was a big mess, okay? Gapped up a tiny bit, wide range, igniting, closing, breakdown bar. This is a bearish 1, 2, 3. Now we're talking about afternoon strategies, but this would have been a morning strategy also. Hey, Sam, your drop down, there's a few of you, if you'll change the drop down to everybody. So here's what we're going to be focusing on primarily in today's session. And Greg said it in the intro. We have all of the day's data now to see what this thing's going to do. So I have a bearish daily, I have a bearish 15-minute chart. And remember these words over here, it's consolidating in the bottom third of the day's range and showing bearish price action. Opposite if it's a late day breakout. So when we say bearish price action, it can't bounce. Green bars are ignored. Consolidation into the declining 20. Greg can talk about that. I have a closing breakdown. And so, Greg, I know I'm throwing a lot on this one slide, but the reason I'm showing the spiders here, look at my arrow. So the spiders broke out. So as a late day trader, I might say, you know what, let's wait. The market's rallying here and I don't want this to snap back in my face to the upside. But as soon as the spiders had this little breakdown failure, we pound on this thing, just hit the bid. That's a late day breakdown.
Aren't you wondering why I have all these hearts on the?
Because you're a chart artist for one thing, but yeah, it means you're helping the concepts as I was talking. So I like it.
Right. So going back to our thought building lessons, everything you were explaining, which was multiple time frames and patterns and different points in time where those patterns created notable points on that 15-minute chart that were coming together over a couple of days. That's the thought process.
Right.
Right. So not only was it multiple time frames and patterns and trends, it was relative strength and weakness as Dan compared to what was happening in the broader markets and then what was happening. And I have marked off 2:30 in the afternoon because between 2 and 2:30, and many times it happens exactly at 2:15, that's the hot time. Now, of course, 3 o'clock and 3:30, but we need to pay attention to those points in time. But as far as late day action goes, you need to be back at your system around 2 o'clock to see, what's going on, through lunchtime if you weren't there, and then putting together what we're talking about here and see if we can find late day breakout, late day breakdown setups, and put it all together like we're explaining.
Yeah. So even
will you try something that will you try at the low or breaking the prior low? Is the middle of the range igniting bar? Yes. Someone's just talking around here. So this is a breakdown strategy. I don't know what you're talking about trying at the low, because what we have happening here is that the spring is being wound. It's getting tight and it's reaching a point in time in the afternoon where again, talking about the psychology of the pattern, not your psychology. This got extended on the downside, and it was going down here, so it bounced. Now, when it got extended here, it tried to bounce and it couldn't. That is great information. That's called relative weakness. And the markets were going up and it went sideways. So this is the point in time where you need to hit the bid and get out. And notice the topping tail. It tried to go up and it didn't. And then there was a little one right there, a little baby one right there. So one of the things as a day trader, you need to focus on what's happening. So many, and we've all done that, is we just look at too much. And as a day trader, it depends on what your abilities are, but I need to be more focused on a few things rather than, just looking at so much and get lost in it.
Yeah, so even though Greg and I spent a lot of time on this one, because it's a great starting example with the many concepts, and you would understand everything in great detail after Greg's course, which I just posted here for Sylvia. But back to the internalization point that I made a moment ago. As soon as I would pull this up, whether I found it through scanning on my own watch list or somebody in the green room brought it to me, everything we just talked about, in a half a second, I would say, yes, do it. I'm joining you. I'm giving it. So, we're just trying to dissect and show things individually. Now, this is pretty much the opposite. It's the same concepts. This one, so the daily chart, I'm showing this, it's consolidating at the rising 50 period moving average. It's getting tight. And this is my morning gap up. So again, this bar is this green bar. It's 54.30 now at the close, but it wasn't 54.30 down here. It was 46, right? So I'm starting with a bullish gap over a bunch of resistance, and it's off to the races. Just like the other one showing relative weakness, this is showing relative strength. Shallow retracement. Remember my sheet here on words? I want a bullish, more than 10 bar base or consolidation in a tight range on the 5-15 minute chart in the upper third of the morning beautiful move. It's up on the day, it's consolidating into the 20. And look how beautiful this is. Didn't retrace. I have a bullish 15, bullish daily, bullish price action. This red bar suggested lower prices. And the bull said, I don't think so. I'm consolidating. Look at the time of day. This was roughly 3 p.m. reversal. Off to the races into the close. So, I say here, do these emotions sound familiar? Particularly as a new trader. Psychologists talk about the 4 stages of learning. And the first one is unconscious incompetence. To me, what that means is you're not smart and you don't know that you're not smart. And that's what happens here. You get lucky, you think you're brilliant, and then you get whacked. Now coming down here is you say, okay, I don't know what I'm doing. I need conscious competence, and that's taking Greg's course. And then you get to your way up to unconscious. You're unconsciously competent, and that's with the seasoning. So yeah, we are going to talk more psychology in these courses, but this is a perfect picture of emotions of if you don't follow the objective information of our course of the concepts.
So right, what Sam says, you don't know you're stupid.
Correct.
But none of us look at it that way. How many of you that have been in the markets for a while trading and at the beginning traded maybe share sizes that were totally inappropriate. And you later found out that what you were doing was stupid. Yeah.
And here, I'm typing to Sam here while you were talking, but so I'm not gonna beat up those people, Sam. Right, ignorance is bliss. I'm not gonna beat up on them because somebody brought them into the market, they got lucky, they bought Bitcoin, we're talking about Lunar, LUNR today. It's like $12 and it went to 135 and somebody bought it there. But we get so many emails where people say, mercy, I've been beat up. I've tried so many things, oscillator salespeople, so many crooks out there, snake oil salesmen. I'm so glad I found you all. Help me with education. That's the conscious incompetence. It means you recognize that you don't know what you're doing. And there's nothing, that's a good thing. Because then you're going to stop doing stupid stuff, hopefully, and stop losing money. All right, so I'm going to focus on this one right here as our late day breakout, and then even this one here. But I'm showing multiple days because it's giving me more information that the late day breakout is going to succeed. So what does all that mean, Dan? This was a nasty downtrend. This is one of our concepts of retracement, greater than 100%. And now I have bullish consolidation into the end of the day. The next day, bearish gap. Should have gone lower, and it didn't. Bullish consolidation until the afternoon, 2:30, 3 o'clock reversal period. That was a very viable late day breakout. Gapped up here. As Greg said in the intro, look, it's consolidating all day in the upper part of the day's range. This little red bar, here, let me put that little red bar is a small breakdown failure.
Yeah.
Now I have a beautiful closing breakout right there above the day's high. That's my entry. Stop under this base, manage in between.
John posted he listened to something on YouTube that described rational trading is about managing probabilities. I would agree with that, John, but there are so many things out there, whether it's on YouTube or webinars, that these presenters have these great little sayings, but do they tell you how to come up with the probabilities? That's what that slide was about, that had trading psychology on it. Right? Because all of those concepts, when you understand them individually and then learn how to put them together, is about creating probabilities. Right? So what we're talking about here when we're looking at these charts, multiple time frames, different patterns, what the trend is, support, resistance, relative strength, and weakness, that is how we are making a checklist to come up with the probabilities are. Market internals, intermarket analysis. All of this creates those probabilities. And there are times, such as now, and at times intraday, where the probabilities are so small in either direction that we call that SOH, sit on your hands, do nothing until something changes. So, even the idea of being disciplined, being patient. How the hell do I do that? I want to press the button and make money. So there's a lot of different things that point you in the way that you should be thinking as a trader, but they don't tell you how to do it. They want to sell you their latest, greatest indicator.
Right. Right. And we obviously have seminars, stock and option seminars, and we have advisory letters. And even when we're just, because people might say, I don't want to learn. I want to sit on the couch and wait for you guys to send me a trade alert. Okay, we can do that. But even when we do that in the format of how we send it out in Telegram, we give you the technical setup. We tell you why we're doing things. So whether you like it or not, we're going to give you education along the way. And, Greg and I have thousands of wonderful testimonials, and we like teaching because it helps us personally, keeps us sharper. We're active traders ourselves. We love helping people succeed. It's a personal satisfaction to watch people come to us struggling or even not struggling, but mastering a much higher level with our approach. And so I just threw this slide in here. This was a prior one of these MT lives, but look at the title. This has to do with psychology again. Light bulb moments. It's when something finally sinks in, and it's an and once you build many of those, that's how you progress as a trader, because to get to one of these aha moments, you've probably been beat up many times, and whatever it takes, it's finally come to the realization is, I got it, I will never do that again. And then that's going to minimize future losses.
But you will do it again. I mean, that's just the way we're built, because as we get to that point of the discipline, it's like how many times you have to put your hand in the fire before you say, hey, man, that hurts. Don't do it again.
Yeah.
The loss of money.
Yeah. All right. So Greg has a saying, it's the same but different. And that's why I always throw more slides on here. We don't need to get to them all. But this is the same but different as the other slide. Why do I say that? Well, here's a big bullish gap. It might have, it gapped up a lot percentage-wise, but guess what? It didn't retrace. So this is not an afternoon breakout. It's extended. It's not consolidating. It's not a tight consolidation. But what I'm again showing you is the 2 days leading up to the late day breakout. Again, this red bar suggested lower prices, snapped right back, bullish consolidation, closing breakout. It's a no-brainer. Same but different. This is more of a, they're different. We give you different flavors, but I have a breakout on the daily and a very strong uptrend. Here's my morning action. It blasted in the morning. We're waiting now at noon. We call the midday doldrums, and we say, let's see what it does over the lunch period. Well, tight consolidation here into the afternoon reversal, closing breakout, bullish daily. I'm good to go, even though this picture is not the same as the other couple we've already reviewed. Come check us out in the Master Trader Green trading room. This is where we're implementing the Master Trader method in real time. Greg starts at 9 a.m. with his pre-market analysis. We look at gap trades, our tier 1 setups for day and swing trading, open positions, scanning, answering questions all day. And so we're doing things prospectively, not just talking about a beautiful chart. We're doing them in real time. Same but different, Greg. I mean, this is such a beautiful pattern if you follow these concepts that we're sharing with you right now. So the daily is what we call like climactic sell setup. Here's my 20 way the heck down here. You got these topping tails, finally took out a prior bar's low. So Greg, tell them what happened on the intraday here. And we love this tail right here.
It's kind of like this is a 15-minute, but we look in this detail here. We see it opened here, which means it went up and got slammed right back down again. So this is part of what we would talk about in retracement concepts and bar by bar and multiple timeframes, but so this opened down here, and maybe on a 2-minute chart, it rallied up to resistance and then went all the way back down again. So somebody got caught going long on something. They just thought, hey, this thing would go from 210 to 300. Sometimes they do, but it didn't. So it came back in, and that ignited a move to the downside. And part of the value of this in this particular time frame is to say, hey, if I didn't get in under that bar's low with a stop above that bar's high, which could be kind of difficult. That's a big bar. I mean, you're talking about having a stop of 10 points, and is it going to go 10 points lower? You can't be absolutely sure, but with a pattern like that, you could think, yeah, but you didn't have to get in at that point necessarily. The late part of the day, it went sideways. Remember what I said? It couldn't go up. Other days, certain stock, maybe this would have rallied all the way up to the 20 and would have formed a sell set up there, but it tried to go up and it got pushed right back down again. Then you get this retest of the pivot.
Hey,
Little
Greg,
blue dot.
I'm not seeing your mouse anywhere.
Well, because you got the mouse, I have to use these nice little things here.
There, now I see it. I didn't before.
Yeah. And so once that pivots and it creates support, another concept, creating support where there is none, and it retested. This was a pattern on an extended move intraday that could have made sense as a long trade, but it didn't go up. It started and went sideways. So the one of the ways to get the psychology of a pattern is to imagine putting yourself in the trade, meaning you bought it on that bar when it traded above that high. And 1, 2, 3, 4, 5 bars later, it's not going up. It's what we have called a 3-bar rule, which says, hey, most of our patterns, if it's not working out after 3 bars to some degree, maybe something's wrong. Reevaluate it. And so that many bars later, and you're at the 20 MA, and it starts to break lower, if you're long, you better get out of the way. And if you're not, well, if you're long, you can flip in the other direction. And a lot of patterns today, platforms, they have a button, right? Well, mine has a button. Reverse. Go the other direction. It's not working out. Reverse. Or you just hit the button short, and putting all the concepts together, you created a bias and probabilities why you believe it's going to go lower. Daily, intraday, void, maybe relative weakness.
Yep. Greg, this is also, I don't want to get too detailed, but this is a fantastic example of we would be shorting under the low of this bar. And we know many people in the green room would then be saying, why are you not waiting till it takes out the low of the day under this tail? And you've used the concept, it's the weight of the evidence. Under this closing bar, under all these bars, failed attempts to bounce, the weight of the evidence is it's going to blast through those, which you can see it did. Same but different, down on the day, couldn't bounce. We defined we define bearish price action is stays in the lower third, topping tails. Remember, topping tail is an attempt to break out of this base for a scalp. And the bar closed with a tail. So selling kicked in before the bar was over. Now, we use this term like a tell, T-E-L-L, to say, okay, now I have the information to know that you're going lower. So these 2 arrows that I'm pointing at were my tells. This green bar was totally negated. I got lower, just drifting lower, drifting lower. This topping tail took out the high of these 3 bars, and I have a new closing breakdown. That is my entry for a late day breakdown. Very tight stop over that tail.
Justin asking if we use below the prices volume. That's not the subject here, Justin, but we, on daily charts, we have a volume there. I'll tell you, we don't pay a lot of attention to it other than volume spikes, because that's the most relevant piece of information when it comes to volume, is that when you have a big spike, which means a tremendous amount of activity, in most stocks, it's going to be institutional activity that created that. So we pay attention to it. And with any concept, volume by itself is not a reason to take any action. You have to put that all together with all the things we're talking about.
But yes, good point, Justin. I do. I have them on my other charts. So again, psychology, we've been talking about this. We're showing you these setups. They sound, they're no-brainers, of course, because the way we're explaining the concepts are all put together. And again, so how do you get this confidence? How do you get confidence in doing anything, Greg? How do you get confidence? You want to be an architect, basketball player? What do you do?
How do you get confidence? Education.
Right, starting point, education. And then practicing your education, seeing it succeed. If you're a pilot and you get your pilot's license and you go out there and crash your plane once a month, something's wrong. You're doing something wrong. So once you have the confidence and the approach, it's the patience and discipline to wait for your setup. I always use silly analogies. A hunter has a checklist, goes out to his deer stand or whatever he's hunting, and he's waiting for his setup to happen. He doesn't go to the deer stand and just start shooting away. So why is trading any different? We have a method, we have a setup, and we're waiting for that setup to occur. If it doesn't, Greg mentioned the SOH. We're sitting on the hands. Whatever's going on the time frame and in the market is not, it's not our pitch, if you will, the baseball analogy. Same but different. Same but different. This is pre-market gap down, as you can see here. Couldn't bounce all day long. And so this one actually didn't even trigger that particular day. And then it had another swan dive the next day.
And let me answer some of these questions, just wondering if volume tells you if volume has legs, for example. Well, if you see a volume spike, Justin and everybody, remember, volume by itself is not a trading strategy. So look at this example that Dan has here. Look at the way this thing want to fall down. Where's the volume? There's no giant volume there. But look at this volume. Look at this.
Right here on the breakdown.
Look right here. Look at this big green volume spike on this bar, and it went down. That tells you traders got caught thinking that this was going to go up. That's good information. But look, we're using that information in a different way other than confirmation, whereas there's no volume spike here as it started to break down, or here, or here. Look, volume begins to pick up on the way down, which means they really believe it's going down now. And now here, it's just going sideways and it can't bounce. And then it starts another leg down again after it consolidated. So volume spikes tell us good information, but it doesn't necessarily mean the way you might be thinking of. Oh, if I see a volume spike, it's going to go up. Not necessarily.
Yep. And just like we pointed out before, look at this tail, where attempts to break out and failed. Same but different. Tail consolidating in the bottom third. I have a breakdown on the daily, closing breakdown. There's your pickup in volume. Which, would I take this trade without the volume? Yes. But does that big volume help the bearishness of this late day breakdown? Yes, it does. So Greg, why are we showing them this slide? Well, I'm saying without proper education, discipline, and patience. And, like you said, we need to do a full MT Live on psychology. But,
This slide is right out of the MTS course,
absolutely. So,
the psychology part of the course, where it talks about why are you a loser?
and so don't be so harsh, but
Well, I mean,
some
I
beat to
hated
that.
it, and that's what I talk about. It's hard love, right? Tough
Right.
love. You're a loser. Why? You want to continue to be a loser or a winner? Of course, we all want to be winners. Well, did you plan the trade? Are you treating it as a business? Discipline. Are you controlling your emotions as much as that possible? Because we're not computers. No money management. Ego, right? You can't admit you're wrong, right? No persistence. You're lazy. You don't do the work. And your expectations exceed experience. You're going to become a gazillionaire, and you haven't even got your head around some method yet. You're still going to webinars, buying somebody's proprietary indicator, trying to figure out the settings and the colors and so on. So part of the message here is that, like any other profession, this takes time. And what's different about it, which makes it even, I guess, so much more difficult than other professions, is that you have so many people out there saying, hey, I can tell you a better way to do it. I'm going to sell you some indicators or Ichikumi clouds or whatever. And so you going from place to place trying to find out what is the proper way to do something versus, even if you're a doctor, it all going to start with, hey, if you're a surgeon, you start with a knife and you cut, right? Well, how deep do you cut and whatever? There's all details to what you do, but it's not about, hey, I'm not, and this guy's saying use a knife and another guy says use a hammer and a screwdriver. Well, come on, it's going to lead to confusion. And we've been there.
Yeah, why don't you continue and tell them about these courses since you're on the subject?
So these are the three courses. The swing trading course, gaps, covers in intraday, gaps in the morning, as well as part of what we're doing here. It covers the late day. And money management is the giant, thing that can get you to the goal line. And very few people are interested in money management and position management. So why? I don't know. Just must be human nature, because it's always been that way. Don's asking, do we have MT Live on setting stops? No, but this course tells you how to set stops and money management. And look, if you're interested into the money management in this, email us. And I mean, I don't have it in here, but you want this one and that one, I'll make one of them 50% off. Or if you want this one and that one, we'll make it one of them 50% off today.
And we're giving the top-down analysis course for free on any of them. Here's a link, top free. And
them to the course, Dan, it's not going to take them to a checkout, is it?
Yeah, all these have purchase buttons. So yeah.
And it has the top-down course in there to add it for free?
I don't know. No, probably not.
Okay.
All right, but so we have a technical based approach also for trading options directionally, meaning, yeah, I want to buy the stock or short the stock, but I want to use options instead because they have leverage and limited risk. And then we also sell options around compelling patterns, just where we're predicting a short-term top or bottom. And you can go to mastertrader.com/spread trader, read about those, email me with any questions. And we're now ready to look at the charts, answer any questions that you have. And we'll see if there's any late day breakout candidates setting up. The way the market's moved here so far, I'm not sure if we will find many, but whenever I'm saying in the green trading room, let's see if it can consolidate through the day. Greg, take a look at Tyson, TSN, daily and 15-minute chart. That's a candidate. I sent a telegram saying if it can go sideways till after 3, then that's a candidate to not only trade a late day breakout, but to get on board a swing trade.
I'm answering the question. All right. So I brought up this particular page. We got options on here. We were going to look at that, but
But Greg, look at Tyson, if you will, because it's one I'm watching.
what's the symbol?
TSN.
Okay.
So daily and 15-minute charts. Let's so daily, it's a beautiful buy setup. 4-bar reversal. And now let's look at a 15-minute chart.
Okay. So I think Justin was asking about volume. This line down here is measuring volume spikes. So I don't have the volume on here, but if this spikes over 100, pokes over 100, that means there was a volume spike. And I can put that in a column, in one of these columns here, that'll show me if there was a volume spike. And I do have it on other things. So that is not what we showed you in the slide, but it could be at 215 or 230. It doesn't have such a great void, Dan. It's at the top of this range.
Yeah.
But, what we're looking for here is something strong in the morning that went sideways, and the 20 MA simple moving average catches up to prices around 2 to 230.
Yeah, I agree. That's not a good late day breakout, but more so of let's see if the swing pattern holds.
Well, this isn't quite there yet. I really got to figure out how to make this tight bases, Dan, but this is looking for a base. And what I did was I put this in a column, which you can see here, and I set it for a 15-minute chart to look for stocks that are basing on a 15-minute chart. So this is a low price stock, and we can look at, and this is just dead, but we could look at something like Dow stocks and see, is there something basing? And so we've got AXP that's basing. There you go. But it's 1249. But this is what we be looking for at between 2 and 230.
Yeah. So
Something that was moving up, and it's going sideways like this, and you're getting a breakout. And it's got room, right? It cleared these highs here. We can look at the daily chart. It's at this resistance, but it's been consolidating for a while, so it's not perfect. But look, we're showing you here trading strategies as to what to be looking for. See, I'm saying, look at HHC, SHC. All right, so that's a daily. Let's go to a 15-minute. It's at resistance, but if this went sideways, Sam, if this went sideways into 230, I think it would be okay. The 20 MA catches up, and that it could go. It could go. So you have to prepare, right? At 12 o'clock, 1 o'clock, you have to prepare for 215, which means create a watch list. So these here, you notice this changed to now stocks, other stocks, diagnostic stocks. You can see that's basing their lower price. So we go back to the Dow, and there was a few here, Coca-Cola. So that's a little sloppy. It's not tight.
very sloppy.
But maybe at 230, it would tighten up. Right? That's too sloppy. This is as well. But we can look at.
John mentioned LPLA, which I'm watching as a bottoming pattern, sloppy, but yes.
LP.
If LPLA 15 can now hold that prior pivot and go sideways, it's a bullish daily for about.
Yeah, that cleared resistance. That's a better one.
Yep.
Again, 2 to 230. One we could put on the list for 2 to 230. What do we have here? Let's put on S&P 500. So we've got a lot of, because the market's not going anywhere. Got a lot of things that are just going sideways. So it could roll over, but didn't have the weakness. Here you go. Could tighten up.
Yeah, but that's okay. I wouldn't call it a late day breakout because the way we define it, we want it in the upper third of the day's range. And that's in the bottom third of the day's range. So it's you could still trade it as an afternoon breakout, but
the range is so tiny, Dan.
what's that?
The range is so tiny. That's the range. That's today's range right here.
Oh, I was looking at the gap up on the 18th. Okay.
I know what you're looking at.
All right.
So this could go sideways into 230.
Okay.
Here you go. That's in the top part of the day's range. That's today. It's going sideways. It's at resistance, but it's what we call absorbing supply, meaning it's into a resistance area and it's going sideways. It's showing strength. There's good demand there. Let's look at the daily chart. That looks pretty good. I mean, it's smaller ranges. It's kind of a little extended, but it could get more extended intraday. Right? Remember, we're talking about day trading here, not swing trading. Having that pattern on a day like this, where it just, after a pullback could be even better. That's a weak one. That's sloppy. But again, at 230, this could tighten up and it's got room to drop. So look, the minder is putting me in the ballpark. We share all of these with students at no cost. Become a student, become a member. And if you have this platform, which we have no affiliation with whatsoever, but we've been using it for decades. SQ, that go back up? Yeah, it gapped down. It's been kind of crazy, but market went up. And if you look at the markets here today, they just continue to just chop sideways. They're, they've gone up. They're at resistance, and maybe just waiting for the inflation data tomorrow.
Here, Greg, look at Dave type EXEL is a beautiful daily. I typed to him. It's not technically a late day breakdown, but regardless, after 3, because of the beautiful daily. No, EXEL.
I know. I'm just telling you, yes, because that gap down, it's in the bottom part of the range, and at 230, it could be a late day breakdown. So it's definitely one to keep an eye on. Note the volume on spike, which of course, gapping down as it did. What was the other one, Dan?
EXEL is a beautiful 1, 2, 3 on the daily. In the 15-minute, although technically not a late day breakdown, the way we define it is still, it would be a breakdown entry on a bear 1, 2, 3 on the daily.
So some of you in there may not understand the lingo. So this is a 1, 2. A 1, 2, 3 is not a strategy in of itself. It's like saying, hey, that's a wide range bar, or that's a topping tail bar. It just points out 2 bars. which is a wide range bar and an inside bar. So this was in essence a 1, 2, 3, but it's, it's in an uptrend, and that's support. This is deteriorating further. So this could be an inside day today if it stays this way at the end of the day, and then could continue lower tomorrow. From our day trading point of view, it's going sideways here. And I want to mention that one of the struggles I know I've had, and I think everybody does, is that you see this pattern on the daily time frame and you think it's going to stay that way. This could be a wide range bar down at 1850 by the end of the day. Because now we mentioned 1, 2, 3. You think, oh, if it stays at 1, 2, 3, I'm gonna have that as a trade setup for tomorrow. Well, it's only almost 1 o'clock, but 4 o'clock, this could be something else. And it's something you have to keep in mind, because I don't know about you, but in my early days, I would see something at 2 o'clock and think it was going to look like that at 4 o'clock. And when it didn't look like that, I was like, what do I do now? So, and as a day trader, if you're trading off of a 15-minute chart, and there's, you see a pattern and there's 7 minutes to go, you need to know that there's 7 minutes to go. Because it might not look like that by the end of the time period. I was mentioning Intuit. That's nice. Nice daily chart. Maybe it could break out tomorrow. I mentioned the 5-minute. It's just trending up. So, it's coming up to the top of the range. So I wouldn't do anything with that intraday. You can see the trading range that it's in. And, so everybody's on YouTube's quiet. SQ. So, we can look at all of these stocks, or even, is there a wide range bar? I think I have this set for a daily chart. So this is one to keep on your list for tomorrow. Again, it's 1 o'clock. I don't know what it'll look like that, but this is a bottoming pattern. It's an airline. Oh, it's UAL that reported earnings. And you got a wide range bar. Now, I wish this spiked above 100. It got close, but it's, the volume backed off today. I want to see that spike like this. See the spike on the down move over here and a gap reversal? That suggests it's going to go lower. Now look how this went up. There's no giant volume. So volume is secondary. You don't always need volume. There's a wide range bar. And it just exploded higher. So I don't know if this will do the same, but I'm going to watch this tomorrow. And this doesn't look like it's going to go sideways into 230. Buying just continues here. Buyers are pretty aggressive. There's a wide range bar. So this is a simple scan. We got many scans, this combo scan thing on the bottom here. There's a lot of different scans looking for different patterns, but it's coming out of a downtrend. Kind of sloppy, but not bad. That might be something in the afternoon. See, it's just grinding higher. It doesn't want to back off. This one is put on the list for later in the day. Another hour and a half going sideways. It's already at the 20. What's the daily look like? It's already a kind of a big bar already. One of the things to consider is looking at the bar's range on a day-to-day basis. And this one is pretty much at what eyeballing probably the size of these big bar ranges. I mean, that one's a gap reversal, but so part of what we need to look at is that consideration as to how far it is on a daily chart. But I mean, this is an excellent 15-minute chart to keep an eye on for the next, hour and a half. I think you all got the gist of what we're doing here today. And I hope you learned a tremendous amount. That's what we do in MT Lives. Consider the courses. That's the fast track. This could become a wide range bar. Someone just typed in the room. Keep an eye on that. Absolutely. It's 2:30.
Thank you for listening to
We'll be back
Master
next
Trader
week.
Live. If you liked the show, we invite you to share this video on your timeline or tag a friend who wants to learn stock market tips. Stay educated with our free chart of the week, a weekly analysis or lesson sent right to your inbox. We're live every week, and you can subscribe to the channel and press the bell to get alerts. If you've enjoyed the event, please give us a thumbs up. Just visit mastertrader.com. That's mastertrader.com.